What is going on, everyone? Welcome back to the channel. I am your host and today is Wednesday, May 27, 2026. We have got an absolutely packed session to break down for you today. The semiconductor space is on fire. AMD is up nearly 8% and kissing all-time highs. Meanwhile, energy and consumer staples are getting hit hard. We have 5 critical stocks to get through, so let's not waste any time. Let's get straight into the numbers and figure out where these stocks are headed next. Alright, let's kick things off with the headline of the day: Advanced Micro Devices, ticker AMD. The stock is up a massive 7.78% today, trading at $503.89, and folks, that puts it within spitting distance of its 52-week high of $506.96. We are essentially looking at an all-time high breakout attempt happening in real time. Let's talk technicals because the chart here is breathtaking. AMD is trading at 503.89, which is well above its 20-day simple moving average of $414 and its 50-day SMA of $309. Think about that for a second. AMD is trading nearly 63% above its 50-day moving average. That tells you the momentum behind this move is absolutely extraordinary. The 200-day SMA is also right at current price, which means we are at a critical confluence zone. Now the RSI, the Relative Strength Index, is sitting at 77.3. Anything above 70 is technically overbought territory. So yes, AMD is extended. I want to be very transparent with you about that. The volume today is 38.2 million shares versus an average daily volume of 35 million, giving us a volume ratio of 1.09. So volume is slightly above average, which confirms the move, but it is not a massive volume surge, meaning some caution is warranted. The 6-month low was $190.95. AMD has more than doubled from those levels in roughly 6 months. The catalyst here is clearly AI chip demand. AMD's MI300X and next-generation GPU accelerators are winning enterprise and hyperscaler contracts at a rapid pace, pulling business away from competitors. Here is the key question: do you chase this at all-time highs? My honest answer is you need to be very selective. If you are already long AMD from lower levels, congratulations, but I would start trimming a position here or at minimum tightening your stop loss. For new buyers, I would wait for a pullback to the 460 to 470 support zone before establishing a full position. The risk-reward chasing an RSI 77 breakout is not ideal. That said, momentum is king right now in AI semiconductors and AMD is leading the charge. My 3-month price target is $545, with support at $460 and resistance at $520. Next up we have Qualcomm, ticker Qualcomm, and this is another semiconductor story that is looking very compelling right now. Qualcomm is up 4.48% today, trading at $248.82, and just like AMD, it is sitting right near its 52-week high of $258. The stock has been on an absolute tear. Looking at the technicals, Qualcomm is trading significantly above all of its major moving averages. The 20-day SMA is at $199.82, so we are about 24% above the 20-day. The 50-day SMA is at $158.94, the stock is trading more than 56% above its 50-day moving average. Just like AMD, this tells a story of incredible upside momentum over a compressed timeframe. The RSI on Qualcomm is 69.6, just a hair below the overbought threshold of 70. That is actually more favorable than AMD's reading and suggests there may be a little more room to run before the stock gets truly stretched. Volume today is 30.6 million shares versus an average of 25.5 million, giving a volume ratio of 1.2. That is the strongest volume ratio of our semiconductor names today, and that is a bullish signal. Buyers are showing up with conviction. Now, what is driving Qualcomm? A few things. First, the mobile AI revolution. Qualcomm Snapdragon chips are inside nearly every premium Android device on the planet, and the on-device AI processing story is accelerating. Second, Qualcomm is making serious inroads into PC chips and automotive semiconductors, diversifying away from pure smartphone dependency. The valuation is also far more reasonable than AMD. Qualcomm's PE ratio is 26.73, compare that to AMD's eye-watering 166 PE. Qualcomm gives you semiconductor exposure at a much more digestible multiple, and the stock still has room to its 52-week high of $258. I actually prefer Qualcomm over AMD on a risk-adjusted basis right here. My 3-month price target is $272. Support is at $228, and resistance sits at that 52-week high of $258. I am calling this one a buy with high confidence. Alright, now let's flip the script and talk about the losers of the day. Chevron, ticker Chevron, is down 3.51%, trading at $184.71. Volume is elevated at 14.2 million shares versus an average of 11.4 million, a volume ratio of 1.25, which means this selling is not random noise. There is real conviction behind this move lower. On the technicals, Chevron is in a clear downtrend. The stock is trading below both its 20-day SMA of $187.97 and its 50-day SMA of $191.48. When a stock is below its 20-day and its 50-day, that is a bearish setup, period. The 6-month high was $209.23, so Chevron is now about 12% off those highs. The 52-week high is $214.71 and the 52-week low is $135.21, so there is a wide range in play. The RSI is at 42.6, not yet oversold but definitely trending in that direction. We are getting close to the 40 level where I would start watching for a potential bounce. What is hurting Chevron? Simply put, oil prices have been under pressure. Concerns about global demand growth, particularly out of China, combined with OPEC production uncertainty, are weighing on the entire energy sector. Chevron is also still digesting its large acquisition activity, and the market is questioning capital allocation priorities. Here is my take: Chevron is not a stock I want to be aggressively buying into today's decline. Let it find support. The $180 area is the next major support zone I am watching that aligns with some prior consolidation. If oil sentiment shifts positive and Chevron holds 180, it could be a compelling value play with its strong dividend yield. But for now, I am calling this a hold wait for stabilization before committing new capital. My 3-month target is $192 assuming a modest oil price recovery. Number 4 on our list today is PepsiCo, ticker PEP, and this one is getting interesting from a contrarian standpoint. PEP is down 3.25% today, trading at $145.68. The stock has had a rough stretch. The 6-month high was $168.98, so we are roughly 14% off those levels. Here is what is catching my attention. The RSI is at 30.3. 30. That is essentially sitting on the oversold line. Historically, when a blue-chip consumer staples company like PepsiCo gets to RSI 30, you want to start paying very close attention. These are the setups that long-term investors should be circling on their calendars. The technicals show PEP is below its 20-day SMA of $152.31 and its 50-day SMA of $153.80. So the short to medium-term trend is down. However, the 52-week low is $127.60, which shows you just how far this stock could fall in a worst-case scenario, but also how much upside there is if sentiment reverses. Volume today is 9.06 million shares against an average of 8.1 million, a ratio of 1.12. Moderate selling pressure. What is the thesis for buying PepsiCo here? First, valuation. A P/E of 22.87 for PepsiCo is actually quite reasonable for a company with global consumer brands, strong pricing power, and a consistent dividend history. Second, at RSI 30, you are near a technical exhaustion point for sellers. Third, consumer staples tend to outperform when macro uncertainty rises, and if we see any economic turbulence in the back half of 2026, money will rotate back into defensive names like PEP. The risk is that weakness continues to 140 or even the 135 area before a real bounce materializes. But for long-term investors with a 12-plus month horizon, I think PepsiCo at current levels is a compelling accumulation opportunity. I am rating this a buy with medium confidence, high conviction for long-term investors, more caution for short-term traders. My 3-month price target is $158. Support at 138, resistance at 153. Last but certainly not least, we have UnitedHealth Group, ticker UNH. The stock is down 2.99% today, trading at $376.86. UnitedHealth has been through an absolute roller coaster over the past year. The 52-week range is a massive $234.60 on the low end to $404.15 at the high. That is a 72% range, which is extraordinary volatility for a company of this size and in this sector. Let's look at the technicals. UNH is sitting just below its 20-day SMA of $380.74, barely, but it is below. The 50-day SMA is at $332.54, so on a longer-term basis the stock is still well above its medium-term average, which is actually constructive. The 6-month high was $401.16, so UNH is about 6% off those levels. The RSI is 58.8, that is neutral to slightly bullish territory. No extreme readings here in either direction, which makes this a more nuanced setup compared to the other names we have covered today. The market cap is $342 billion, and the PE ratio is 28.4, which is fair for a company with UnitedHealth's diversified healthcare ecosystem, which includes both insurance through UnitedHealthcare and services through Optum. The volume today is 6.48 million shares versus an average of 5.9 million, a ratio of 1.09, so slightly above average selling. What is weighing on UNH? Healthcare policy uncertainty continues to be a headwind. Any discussion of Medicare Advantage reimbursement changes or regulatory pressure on managed care organizations creates selling pressure. There have also been lingering concerns about medical cost ratios creeping higher. Here is my read: UNH is not cheap, but it is not expensive either at a 28 PE for a best-in-class healthcare operator. The pullback from 404 to 376 is giving investors a better entry point. I would look for the 50-day SMA area around 332 as a strong buy the dip level if we get continued weakness, but even here at 376 with an RSI near 59, this is a reasonable accumulation zone for long-term healthcare exposure. I am rating UNH a hold here with a price target of $400 over the next 3 months, upside to the prior highs. Support at 355, resistance at 404. And that is a wrap on today's top 5 stocks for May 27, 2026. Quick recap: Qualcomm is my top pick of the day, strong volume, reasonable valuation, and momentum in the right direction. PEP is a longer-term contrarian buy with RSI touching oversold. AMD is incredible but get cautious up here near all-time highs. Chevron and UNH need a little more time to develop. As always, nothing in this video is financial advice, do your own research. If you found this valuable, smash that like button, hit subscribe, and ring the notification bell so you catch these daily breakdowns every single morning. Drop your stock picks in the comments, I read every single one. See you tomorrow.